Back at 8:44, if you're looking for a better yield when you invest, Brent Wilsey could have the answer for you. Joining us now to talk more about dividend stocks is the president of Wilsey Asset Management, Brent Wilsey. Brent, great to see you. Good morning.
Good to be here as always.
Let's start with the basics. What is that?
Well, you know, it's very important.
Dividend stock.
Dividend stocks. And some people say, oh, stocks, or they get scared right away. Well, we got to back up just a little bit here because stocks are equities. We call them ownership of a company. So don't be afraid just because it's a stock. You own something very important. But what people look at is they look for how am I going to get a return? Well, stocks, dividends, companies pay dividends. And some of these dividends can be very good, between 3 and 6%. But the key is you have to know what you're doing or else you could get burned.
Because we were talking earlier and you said the way you look at so many other things, and then dividend is kind of the last thing and it's like icing on the cake, right?
Exactly. And we tell people, be careful because some people chase yield. Oh, well, this pays a 7% yield. We had on our radio show yesterday, we talked about a company, GameStop. Their yield 30%. Do not chase that because that's probably going to be cut. Dividends are set by the board of directors. They can cut them each quarter. But what we look at to make sure we're not going to have that problem is we'll look at what we call the dividend payout ratio. How much of the earnings does the company use to pay out that dividend? We also look at the cash flow, how much cash. And there's a cash flow statement that we read, like a balance sheet and income statement. We read to say, how's the cash flow doing? And then also, too, Jason, we look at the debt. How much debt does this company have? If they have a lot of debt, they might cut that dividend. So we want to be very careful what we're doing when you're buying dividend stocks.
You mentioned GameStop, and again, we were talking earlier. Talk to us about why you wouldn't chase GameStop. Well, it looks like a high yield, but the stock compared to what it used to be is really taking a backslide.
Oh yeah, and we looked at this company, gosh, about 5 years ago. It was on $50 a share. It's what we call value trap. It looked like it was a great investment, but we said no, after reading about 15, 20 hours of it, this company could have trouble. So now it is down, what, to $5, as I said. You've got to be careful of a business that's going to have problems. And if they're having problems, they're going to cut that dividend. Then you have two problems. You have no dividend, and you also have a stock that's at a lower price. So that's where people get worried and get nervous about stocks. You have to know what you're doing. If you do, you'll avoid those bad situations.
And I would think the basic would be cash flow versus debt. That's something you look at very seriously, right?
Yep. Cash flow versus debt, and also very important, how much of the earnings they're using to pay out that dividend. We bought GE, we made a lot of money off of GE. We sold a few years ago because we noticed, wait a minute, the dividend payout ratio, 110%. How can you pay out dividends more than you're bringing in? If it doesn't make sense, don't do it.
So basically, it's don't chase dividends.
Don't chase dividends.
There's so much else you need to look at the health of a company.
Yes, yeah,
right? Don't
chase yield because people see the yield, oh, it's 7%. Right now, AT&T is almost 7%. We're worried about something that they have on the books called goodwill. If they write down the goodwill, the debt could rise. A lot of things. I mean, that's why we spend so much time looking at this. It's not just as simple as looking at a company saying, oh, they get a great yield, I'm going to buy it. That's how people get burned.
I see. Okay, your seminars are very informative. Any coming up?
Yes, actually we do. We got one coming up Thursday, June 20th in Scripps Ranch at 6:30. People can find that on our website at smartinvesting2000.com, which you always know that one.
Yes, I know that one. And those are, like I said, very informative sessions too.
And we talk about things like dividends.
Exactly, for over an hour.
Yes.
It's really good stuff.
But not too long to wake it's boring.
No, it's not boring at all. All right, thank you, Brent.
You're welcome.
Good information.